Nvidia just saved the market. The stock is up roughly 5% after hours, and we do see a nice excitement for AI stocks. For example, Nebius is up roughly 7%. AMD is up over 4%. CoreWeave is up over 9%. And on today's episode, we're going to take a closer look at what Nvidia shared and why investors are so excited. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
Like I mentioned, Nvidia just reported earnings and the stock is up roughly 5% after hours. Now, I'm not going to lie. I actually came to this earnings not expecting much. I was expecting actually the market to not really see much of a movement. So to my surprise, I'm happy to get this beneficial win and this nice tailwind in the overall AI market. Now, we're going to look at some of the numbers, but overall, what I'm super excited is tomorrow when we wake up, I am certain that we're going to wake up with numerous upgrades to Nvidia, from price targets to buy ratings to saying that the stock is still undervalued because of the amount of revenue it got this quarter, and more importantly, the guidance. And let's look at those numbers first. So Nvidia's guidance was $65 billion. Now, earlier this morning, I kind of talked about what the market was expected. For the consensus of quarter three, it was roughly $54.5 billion. For guidance, it was closer to $61 billion. Now, I asked, what do you guys think? I'm expecting closer to 64 than 61. And we actually got that, right? We got that 65 billion. So a nice beat in guidance. And for quarter three, we saw expected was 54.3, but we ended up getting $57 billion. So this to me gets me excited, because if analysts, even the high analysts that were super bullish on these companies, were still wrong, it just showcases that the market still doesn't understand completely the growth opportunities. And if the market doesn't understand completely the growth opportunities, then there's room for this market to continue to grow over time and for this asset to grow over time. And that's why tomorrow I'm expecting a nice amount of analyst price target hikes. Now, another thing here in revenue that was actually pretty exciting for me was the networking market. The networking market was roughly $8 billion this quarter, and it was up 162% year over year. This is crazy. That's over a $32 billion run rate if you look at the quarter three numbers only. And that is more revenue than some other AI companies, not AI companies, than some other networking companies do on networking, which is their core market. So Nvidia is just a beast in all angles, from compute, from networking, from gaming. Obviously, the other markets did see a nice amount of growth. We saw professional visualization up 56, gaming up 30%. But at the end of the day, I'm going to say that the most crucial and the most important is the data center space. Now, with the guidance, it is also important to remember that this does not include any Chinese market. So if the China market ever does pick up, that is going to be a massive tailwind for Nvidia. Now, here's just another great chart of the kind of the data center market, and you can kind of just easily see the big growth between the previous quarter two, and quarter three. It was one of the biggest jumps ever, and we did get some great commentary from Jensen. So again, this is top overviews, but I do have a really great presentation for you guys. So I hope you guys are enjoying the content so far. So first, we saw those numbers, right? $51 billion in quarter three data center revenue, up 66%. Compute growth was 56%, driven by the GB300. The company delivered record quarter three data center, driven by the GB300 RAM. For those that are not familiar, that is the Blackwell Ultra. Now, some interesting things that are creating the bullish sentiment for the overall AI space is the cloud capacity and demand. The clouds are sold out. They mentioned the demand remains high across all GPU generations, Blackwell, Hopper, and Ampere. And utilization, every stood up GPU is taken immediately. And future outlook, the market hasn't even seen the full benefits of the B300, yet alone Rubin. So there has been this AI bubble scare of GPU depreciations being so bad that 3 years is not enough. It is when these GPUs go obsolete. But Jensen came out and said, look, Hopper is still going, and that's over a 3-year product. Ampere, which is over a 6-year product, is still being utilized and fully utilized. Now, before we go any further, if you guys are enjoying the episode, please make sure to hit the subscribe and the thumbs up. I'm trying to hit 85,000 subs by the end of the year. We're at 81. I'm not sure we're going to get there, but would truly appreciate any of the support. We do free daily videos and coverage on popular AI semiconductor news in this channel, completely free. Now, if you want more than YouTube, if you want deep dives on semiconductor and AI stocks, if you want episode slides, live Q&A, sessions monthly, a community of serious investors, check out whatthechip.com and use code YouTube. Yeah, just YouTube to get 15% off the annual subscription. So definitely check it out. Now, the Blackwell transition. This was also something that was pretty insane. The GB300 dominance. The transition has been seamless from the GB200 to the GB300. The GB300 now contributes roughly 2/3 of total Blackwell revenue, and production shipments to major cloud service providers and hyperscalers are already driving their growth metrics. It's insane that the Blackwell Ultra is just starting up and it's already the big portion of the Blackwell revenue. It gets me excited at how quickly this company can release a new product and ramp up that product to be a meaningful portion of revenue. It gets me excited for the potential when Rubin comes out. You're going to see that nice, seamless ramp up process as well. Now they even talked about Hopper. Hopper is the previous architecture, right? So this is the 13th quarter since inception that the Hopper platform remains a critical driver. 13 quarters was that. That's over 3 years. And this quarter, it recorded approximately $2 billion in revenue in quarter three alone, providing demand, proving that demand persists alongside newer generations. Now, just to put this in perspective, $2 billion on a product that's almost 3 years old. I don't think AMD's AI chip revenue is doing $2 billion revenue a quarter on their most updated. I don't think any of the ASIC players are near this level just yet. Maybe Broadcom might be, but actually not sure because Broadcom includes other parts in the AI stuff. So even if it is, NVIDIA's Hopper, which is 13 quarters old, is still doing more revenue than some of these other AI companies. And the main reason is their full stack solutions allows them to improve the software stack and keep older generations relevant. Now, they also talked about the road to the next generation, which is the Rubin platform. They mentioned silicon status is looking extremely beautiful, and the launch timeline is on track to ramp in the second half of 2026. So there should be no surprises there. Now, they also mentioned that the ecosystem is ready. The partners, the supply chain, they have mastered the build to installation process of the rack architecture. And it's going to help with another, hopefully, seamless transition to the Rubin, which is going to be pretty exciting. Now, when Jensen came in, he did start addressing the AI bubble concerns. And Jensen directly countered the bubble by talking that the A100 GPUs we shipped 6 years ago are still running at full utilization today. And Michael Burry actually responded to this, and I'm actually going to show that tweet in a bit. But most accelerators without CUDA become absolute within a few years, not NVIDIA GPUs. And massive install base extends useful life well beyond original estimates. So this was a main shot against the AI bubble concerns. Now, margin performance is also doing well. For quarter three, this is actually for quarter four guidance. Quarter four, they're still expecting in the mid 70s, even though they plan to forecast, even though we're seeing an increase in rising input costs. HBM, for example, has seen a massive growth, and that massive growth has created some fears that margins are going to be hit for NVIDIA. NVIDIA says no. We plan, we forecast, and we negotiate with our supply chain well in advance. So even though prices have gone up, we still expect mid 70% for next year as well. Now, what got me even more excited, and as you can tell, I think NVIDIA dominated this earnings. Revenue visibility. This $500 billion visibility of Blackwell and Rubin revenue through the end of 2026. And they did reiterate and kind of confirm that this is from the beginning of 2025 calendar year to the end of 2026. So it's all 8 quarters. They still are seeing this, which is still a massive, massive growth in revenue and a lot higher than what analysts are expecting. But there is an upside. They mentioned that they're working into the forecast with still several quarters to go, and new opportunities are constantly emerging. Two opportunities actually just came up. The first is the KSA agreement, which is an extra 400 to 600,000 additional GPUs over the next 3 years, separate from the base forecast. And then the Anthropic deal that they announced just a few days ago is also net new. So this revenue visibility has upside potential, which is insane. Now, kind of talking about Anthropic here, this is a new partnership win. Right, they mentioned for the first time, Anthropic is adopting NVIDIA deep collaboration to optimize models for CUDA. That, in my opinion, is extremely huge win for GPUs. Anthropic has mainly been using TPUs, right, and AWS Trainium, so ASIC solutions. You're seeing that Anthropic is saying those are good, but we still need to enter the NVIDIA ecosystem because they're also doing good. So it showcases how strong NVIDIA is with its GPU architecture. We saw that 1 gigawatt compute of commitment for Grace Blackwell and Vera Rubin, and NVIDIA remains the only platform running every major AI model: OpenAI, Anthropic, xAI, Gemini, and thinking machines. Now, what also got pretty exciting about this, and it just showcases this, is NVIDIA mentioned not only Anthropic, but they are seeing more wins on their platforms on companies that used to go and check for other solutions instead via maybe AMD, maybe ASICs. They're coming back to NVIDIA because NVIDIA is developing this whole rack scale ecosystem, which is crucial for the TCO and is crucial for NVIDIA for the AI and now updates. So overall, record revenue, massive forward visibility, and upside to the visibility, a seamless transaction to Blackwell and Rubin era projects continues to give a healthy margin for NVIDIA of roughly 75%. And overall, I think Jensen did a really, really good job. And I understand why a lot of these AI stocks are up after hours, which gets me pretty excited because if you are part of the community, you have seen some of the stocks I've been buying. Even though I don't kind of do stock recommendations, I do share when I buy and sell stocks. So definitely check out What the Chip Happened if you want deep dives or if you just want some of my internal thoughts. Now, the final thing here is Michael Burry posted this: the idea of useful life for depreciation being longer because chips from more than 3 to 4 years ago are fully booked confuses physical utilization with value creation. Just because something is used does not mean it's profitable. GAAP refers to economic benefit. Airlines keep old planes around for overflowing during Thanksgiving or Christmas, but are only marginally profitable on the planes all the same and not worth much at all. A100s take 2 to 3 times more power per flop compute unit, so cost 2 to 3 times more in electricity alone than H100. And NVIDIA claims H100 is 25 times less energy efficient than Blackwell for inference. If that is the direction you're going, chances are you have to be doing it, and it's not pleasant. Quick downside here. First is this would make sense if you were buying A100s right now, but no one is buying A100s. You're using old A100s that you bought of many years ago, and those are still collecting revenue. The other thing is A100s, while they are older GPUs, there are still other slower process. There are some data centers that are still just CPU only. So adding this, even the A100 or still using an A100 is still better than some of the other markets that are just using CPU alone. So, I mean, I think Michael Burry should just take the loss here, just take the L, and I save the semiconductors to us people that understand the semiconductor industry. Overall, if we continue to see sell-offs with things like this, I'm willing to take the buying opportunity. But right now, I am pretty excited to not have weak hands during the sell-off. And even if stocks go down tomorrow, I think NVIDIA at least solidifies that this AI market is still very, very much in early tailwinds. And no matter what happens next month or 2 months from now, my belief, the opportunity for a lot of the AI stocks are still very, very bullish. So I hope you guys enjoyed today's episode. Take care, have a good day, and check out whatthechiphappened.com.